Hello, this is Thomas Johannsen from Johannsen Group Mortgage powered by Edge Home Finance. Today we're going to go through the mortgage calculator and how to use that to figure out your monthly payment estimate when you're looking at some homes and home options, whether you're refinancing or purchasing. So you can find my website pretty easily here and there. Just Google Johannsen Group Mortgage, Edge Home Finance, anything like that. And you'll see my face maybe, and certainly just be able to click and find johannsengroup.com. You can find the mortgage calculator right at the top menu if you're on a computer, or the drop down if you're on a phone, and certainly just scrolling down a little bit you also see the mortgage calculator. So there's there, and also under links it's always there from my Instagram. Got open the window here. You see at the top some average rates just as example rates, which are the best average rates from lenders across the country. And we'll walk through it step by step here. So conventional loan we're going to start with. Home price $400,000. Minimum down payment on a conventional loan is going to be 3%. Though you're going to want to know what your minimum down payment is. Certainly let me know if you have a question there. The loan amount will automatically be calculated. Interest rate, we'll just use whatever the national average is, 6.5%. And these rates are usually typically with some points, even as much as around 1 point or so for national average rates. Just keep that in mind, and they're for the best borrowers, also prime borrowers. So start date, don't worry about that. That's just to see when it would be paid off. But moving forward, financing cost is not going to apply to this scenario because this is an FHA or VA type of consideration. Homeowner's insurance, also known as hazard insurance, I like to recommend $150 a month if you're not sure exactly where you would be for a single family home. About $75 a month for townhomes or condos. Certainly get in touch with a good insurance agent. They'll be able to help you figure out a more accurate calculation of where you should be. But yeah, $150 a month we'll use for now, and multiplying that by 12 we get $1,800. I skipped over PMI, pardon me. So this is going to be private mortgage insurance and required if you have less than a 20% down payment for a conventional loan. If you're not sure where you're at there, just put it at 0.5%. And you can do that by sliding or simply using the arrow keys to get to where you want to go. I have mentioned to the developer to improve this to make it just something we can type in. That'd be faster. For taxes, you're going to want to figure out where you're looking. The county is what levies the property taxes. I brought up my home county of Dane County in Madison, Wisconsin, where I'm from. And you can see the property taxes are 2.11%. This is from Smart Asset, and if you just Google property tax calculator Smart Asset, you'll be able to get there and put in any county in the U.S. Let's see what Los Angeles is like. Lived there for a while. I wonder what theirs are. Okay, 0.82, pretty low. Or where I currently live, approximately, not in Minneapolis, but in the Minneapolis area, 1.32%, and so on. So you can use whatever those are, just multiply that times the property purchase price, and you're going to get a pretty good approximation of what your monthly taxes would be. Certainly might not be exactly what it is, and you can get the exact taxes as well from the property county websites for that specific property. HOAs are homeowners association dues. They are going to apply to condos and townhomes, sometimes to single-family home neighborhoods, but typically only the newest single-family homes, newer than 2000 builds, year 2000 builds. So townhomes and condos, just look at the specific association to know what the condo is going to have for their HOA fees. And those will be listed on websites like Redfin. If you look under HOA, it might be anywhere from a couple $100 to $450, $500 in that range. Certainly could be a lot higher than that as well. So just be careful to double check that. This is if there's interest only on the loan, and I'm certainly not going to go over that at this point, as this is relating to fixed rate mortgages and just sort of more basic calculation and standard for most people. So we have here the breakdown of principal, interest, that PMI, taxes, insurance, HOA dues, and then our total monthly payment from all of that put together, $3,467. And in the first month, of course, there's a higher proportion of interest to principal, but the actual total of these two put together does not change if we look at this pie chart and slide through from month to month. Principal just becomes larger and larger and larger over time, And that's really the nature of the amortization schedule itself. And you can even see that eventually that little pink slice cuts off, and that's the PMI itself. So right around there. It's about 12, 13 years from now or so where it cuts off. And you can always cut that, get rid of PMI a lot sooner if you refinance potentially, depending on if there's been appreciation on your home. That is about it for conventional. FHA, there's not a whole lot of difference. We're going to keep everything else the same for the most part. We'll change the minimum down payment to 3.5. Interest rates tend to be slightly different on FHA on average, so we could say 6.1 here, but it's again just going to depend on your specific situation. Upfront PMI, or MIP, excuse me, is going to be 1.75 for FHA. So let's just hit that sideways a few times there. MIP here is 0.55, and nothing else changes. All right, now we've got our FHA price, $33.70, I should say, monthly costs. If we hit the print icon, then we're going to come up with the breakdown there that we can print out on a piece of paper or save it as a PDF for our records or email it to someone. You can also share it here if you want to copy the link and share the scenario. Finally, we've got VA as well, and that's going to be pretty similar to FHA where you've got that funding fee. If you go to the VA funding fee website, you can find a little table. Make sure you're at va.gov and see the schedule for what the funding fee should be depending on if this is your first use or not and how much down payment there is. And if you're going to be doing a USDA loan, you could put that as a conventional loan and then simply for the PMI put in 0.3. I believe it's still at 0.3. It's been just a little bit since I've done a USDA loan, quite honestly. But I can always look that up for you right away to make sure you get the most accurate number. So just let me know if you're interested there and use 0.3 for the PMI. And otherwise, that's going to be pretty similar to FHA or, conventional. Like VA, and I didn't mention this on VA, the minimum down payment on a USDA is 0%. You just don't have the drop-down option to put that in there. But yeah, that is about it. Let me know if you have any questions at all. This is Thomas Johannsen from Johannsen Group Mortgage, powered by Edge Home Finance. Our goal is to add more wealth to your home ownership by saving time with great rates and saving you money in the end. Take care.